Okay, so lesson number 2 is going to be quick. I had a client, she's a friend. She hasn't joined CFA, but now that this happened, she's thinking she and her husband should join. But she got a call from someone who wanted a hard money loan in Dayton, Ohio. She's never been to Dayton. In fact, she called it Dalton. So she gets this call, and she sent me the proposal. As far as it was a proposal, it wasn't really a great proposal, but it was kind of an email from a guy describing what he wants to do. So he's an owner of a manufacturing company, moving his business from Toronto, Canada to Dayton, Ohio, because he knew a guy who was selling a property and it would be perfect for his business. Now, I don't know why he's moving from Toronto. That's a very big city. Dayton's not as big a city. I think Toronto has like 3 million people. So anyway, I offered her to do a mini due diligence package and list all the questions that she should ask the seller and the borrower. So this guy wants to buy 3 individual lots with properties on them, commercial properties, industrial properties, 1 industrial and 2 commercial. And I looked at the pictures and it looked like a disaster. So like the ceiling was falling in on one of these buildings. So that brought many more questions to light. For example, where is the money for repairs coming from? He says that he has enough money for repairs, but is that person going to be an equity partner or a debt partner? He was asking my friend for $150,000 to buy the buildings. And I'm like, okay, so who's paying for the repairs? How much are the repairs? Has he talked to the city to see if he can even use these buildings for the purpose that his company would need them for? Are they, so they're empty. So usually commercial buildings are worth the cash flow that they get. So in this case, the commercial buildings are empty because he wants to move his business in it. So then that begs the question, is this company going to be able to support these payments? I'm assuming, but we need to see how strong this borrower is, not only now, but in the future. So now, how is he going to sustain or live while he's fixing these buildings? And then how fast will it take to ramp up his business? So that seemed to me like minimum 18 months, maybe more. And then because it's industrial, I asked, one of the questions was, when was the last time an environmental or toxic test was done? They call it a phase 1, environmental phase 1, phase 2, because if there was anything toxic, like if it was some kind of car repair garage, or if it's near anything that uses toxic chemicals, then you need a phase 1. And so I gave her the cost of all these different reports that they would need to provide. She doesn't do that, right? They would need to provide this. I said, is this guy willing to go and get all these reports so you're sure that there's no toxic stuff, an appraisal, because this is basically an as-is appraisal we need, plus we need an after-repaired value to see would it be worth even putting all that money into it. So there was I think there was at least 40 questions between the market this property's in, the value of the property now and in the future, what repairs, like a very thorough estimate would be needed, and then all these reports that she would need. And then the borrower, like all the questions to ask the borrower. So with that, she liked the list. I gave her the due diligence stuff, like, oh, this was another one, this was good. So I could see that there was probably a cloud on title too, because as part of the kind of flyover due diligence is I get the report on each property. So one address was 309, one address was 311, one address was 333. Well, when I pulled up 333, there were actually 2 parcel numbers that had that address with 2 different owners. So one of my questions was, are these 2 LLCs or corporations even related? Like, because look to me that the site address or the street address was being applied to 2 different properties, which is a problem, definitely a problem. And then 309 didn't have any description at all. So it sounds like probably someone attached the wrong address to the wrong parcel number, but that can take a couple of months or more to straighten out. So we call that a cloud on title. If you're buying 333 Main Street and there's another 333 Main Street, you have to ask, which one do you own? Well, you could say, I own the 333 Main Street that has this parcel number, but what happens to the guy that thinks he owns 333? You're getting each other's mail. He could have a claim. So then my next question was, does anyone have an easement on these properties? In other words, they're commercial and one is open land. So are people driving through this vacant land to get to their property? I mean, so that's another thing to check. So after all that, she felt like probably she won't. And when I asked her this one question, I said, if they can't pay, if they don't pay your note, they owe you $150,000, and this is going to trip you out when I tell you what he offered, but as far as payment. But so if they don't pay their payment, are you willing to own that property? And she goes, no. And I said, well, guess what? When you invest in a note, you have to ask yourself, am I willing to own that property? Because if you have to foreclose, guess what? You own a property and you inherit all the problems that come with it. So you don't want to just lend someone money. You want to do your due diligence just as if you were buying the property. So he offered 8 or 9% interest. I said, I would want 15% or more, but actually I wouldn't do this deal, right? There's too much hair on this deal. So anyway, so that was a good learning for her. And then she asked whether I teach notes in Cashflow Academy. And I said, well, that's going to be in step 2 or level 2, but you can come on this call and ask anything about any deal you're looking at.